Hello traders, how are you? Vladimir here from Traders Academy Club, and in this video I would like to share with you the way I love to trade. When I say love, I mean I love to trade false breakouts and convergences. From my point of view, it is absolutely one of the most reliable technical conditions based on price action. And I would want to explain the logic behind it. And I hope that after watching this video, your eyes and your interest in this method would be skyrocketing and you will understand the power behind it. Note, it's one of my favorite manual trading strategies. Okay, so before we do that, if you are new to this channel, I would like to welcome you to our community. Welcome to our amazing community, and I invite you to subscribe to the channel. Please follow the subscribe button below the video. Just remember to enable the notification so you know when there is a new content available for you in the channel. And also I invite you to join our trading family, Traders Academy Club, where, as you can see on the image, you get access to our full free VIP price action trading course. You will enjoy from a real-time trading ideas, mainly real-time trading education. I am myself internationally certified financial technician, and all my knowledge of trading and the technical part, that's what I get here. And you receive live education with every single trade. It comes with a video and track recorded in the journal, and the video. In this video, I would want to take direct example from our trading journal. As you can see here, okay, this is where I track record every single idea I publish and explain. Today I want to discuss about this one, the oil. So I was working here with a sell, and I want to explain what stands behind my sell and why. Yes, it was aggressive in the market condition, considering the war, considering everything, but this is exactly what I wanted to trade. This is exactly why I was trading it, and I want to explain why. But I do have a tiny request for you before I explain everything. If you find this video helpful, useful, educational, first of all, feel free to share with anyone who can benefit by watching that. It's open for the community. And also, please hit the like button below the video and drop some feedback in the comment section. 20 seconds of your time is a huge help to me, my work, and this channel to continue and grow. So thank you very much in advance to all those of you who help. Going back to our oil trading idea, here is what we have. False breakout followed by a flip on the price, and this is exactly what I want to explain here. So what is a false breakout? First of all, I'll go on blank screen to explain that. This is a place where the uptrend is a place where the market creates higher highs, higher lows, and false breakout is a place where it fails. So it tries to break through, buyers try to take the control and push the price higher, but what happens eventually, they fail, price retraces back to below the broken area, and we have a close below that. This is a sign of false breakout. Now, if it comes with a bearish divergence, which we are looking at, I'm using the MACD, you can use RSI, CCI, momentum. Different traders use different indicators. Of course, I teach everything what I do and how I do in Traders Academy Club. Once again, you are very welcome to join our family there and learn these techniques real time. So I'm looking on my MACD and I want to compare the highs, the fake highs on the chart are basically showing bearish divergence in that case, because I'm looking for a fake high. So I'm looking for a bears to take the control. I want a bearish divergence, so higher highs on the chart, lower highs on the indicator. This would be the sign for me. And then what happens next is I am looking for the price to flip. The one of the characteristics of the uptrend is higher highs, higher lows. When it flips and we start to see lower lows, we understand, maybe the buyers are not in control anymore. And that's one of the first signs. And afterwards, with the pullback, I am looking to sell from specific levels, which I want to explain now. So going back to the oil, what we've had here, as you pay attention, after a clear uptrend, look what happened since. Fake high. Okay, look at the divergence. Look at the histogram. Look at the RSI. It's screaming that the buyers are actually not that strong, and that's a good chance this is a fake high. What happens afterwards is this low is cleaned and the next low is cleaned, and what happens here, we build two false breakout. One fake high over this top, another fake high over this top as the price retraces to below this given area. And what happens then, it's lower lows on the chart, which I love to verify on the indicator, also MACD. I love to see the lower lows on the MACD as well, MACD indicator, of course. And a very, very, very important thing here, it's, as you can see, for me, it's automatic because I'm using here the Fallsburg convergence indicator. You can get this indicator and you can find the link to this indicator below the video. It's in my blog, in-house indicators. It's official tools we developed with our programmers. It gives me, of course, the automatic alert once there is a convergence that comes in play. And from this moment, for me, I want, as I explained before, because we flipped, I want to sell. The question is, where do I want to sell from? And that's how I work with the simple logics of highs and lows, support resistance applied here. Once this low is cleaned, I am looking on the resistance where the sellers to control, which is here. Okay. Once this low is cleaned, this high also becomes in play for me. And this logic is the logic I teach and use real-time in Traders Academy Club. Price action with proven technical analysis and trading methods followed by divergence and convergence. If you are interested in learning all that in details and see how that is implemented in real time with a detailed explanation why, I invite you once again to our family, Traders Academy Club. You can find the link below the video in the description or in the pinned comment. So here is what happened. This low was cleaned. This high becomes a high of interest, right? This low was cleaned. This high becomes a zone of interest. And look what happens here. Boom, I get an opportunity, a window, a range of prices where I know the sellers, if it is indeed a flip of the trend, would potentially take the control. From this moment, I go and I love to trade with trending conditions. One of the strategies that I love to trade the most is a hidden divergence. Once I identify trending structures and conditions, what I love to do is to verify my trading conditions. In that case, we can clearly see lower highs, lower lows, which is a sign of a downtrend, right? Downtrend is identified this way. And then I want to get the pullback. Again, remember this area from the 4-hour chart. And hidden divergence. So the way it looks like, it's lower highs on the chart, higher highs on the indicator. And once we got it done here, this is for me a sign that we have a great sell opportunity. Okay, now going back to the original idea, this is exactly what I'm looking at. An invalidation zone means, very in simple language, until what level my bearish view is valid. Okay, so as long as we hold this stop, and why this stop? Because this was the last stop before the price flipped. So as long as we hold this area, I will be looking for to sell the pullbacks and to look for setups after these corrections to join the sells. Okay, so once again, the logic here, it might look very complicated, but it's after some practice and understanding the logic behind and seeing that happening over and over and over and over again, you understand that it happens for a reason. And this reason is because buyers and sellers take control from a specific level with a specific price structure. When you know how to implement that with the trading strategies, and so you get a massive tool in your trading hands, and it gives you a huge opportunity to enjoy from massive trade. And in that case, well, this was my target zone right here. Okay, in that case, you can understand how powerful such tool can be in your hands when you are able to spot these fake highs and the flip of the trends and spot the direction with a great trading strategy for entry. You get massive chance in your hands. So again, I wanted to explain in this video how I identify the false breakouts, what are the false breakouts, and what does it mean, the convergence. For me, it's automatically with the indicator, as I mentioned before. You can find, as I said, all the information about this indicator with the link below in the in-house indicators, the false break and convergence, FBCI indicator, and I'm sure you will love it. For me, it's a huge help in my trading, and it's not a secret. Those of you who follow me know that that's one of my best and most reliable trading techniques that I implement, and I teach in Traders Academy Club. So I hope you find this video helpful, and I hope I managed to open your eyes a bit to what is a false breakout, what is a fake high, how does that work together with a bearish divergence, and what does the price flip and how does it look like combined together in trading. Of course, it takes more to understand and practice that, and the most important thing is to see that happen real time. And that's once again an opportunity to invite you to our trading family, Traders Academy Club. Enjoy from the best of our educational content we have to offer and deliver in real time with all our trading ideas. I hope to see you with us. If you have any questions about the false breakouts, the divergence and convergence, don't hesitate to ask me in the comment section below. I'll be more than happy to share and to help. So thank you very much for your time watching this video. I wish you all the best. Stay safe, be healthy, and I'll see you soon with more. Adios for now.